Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to take a look on the financial earnings for the first quarter of fiscal year 2024 of the Tesla, which is a renowned electric car maker. It has a presence in different sectors under different verticals, but in today's session, we are going to be mainly focused on its electric car business, and that includes the Cybertruck and other initiatives in the automotive segment. For the long time, the Tesla stock has been rising and rising, which had catapulted the Elon Musk as the richest man on the earth at some point in time. But now the Tesla's growth story seems to be stalling, and resultantly, its market valuations have also dropped and seems to be going sideways rather than growing like earlier. And that is mainly attributable to the fact that its earnings, its revenue, its net profit is not really rising as much as the investors would like, and that has contributed to this sideways movement in its revenues as well as in its stock price. We got its first quarter's earnings report last month, and since then, we have seen that the stock has moved slightly up, but still it is far below its earlier peaks. And we will try to understand why this is happening, how the first quarter 2024 earnings compare with the first quarter of 2023, and then we will also consider the forward guidance to see if there are positive or negative headwinds in the current environment. For the operational side, we have to consider its consolidated statement of operation to gauge the growth story. The print is too small. I think I will have to zoom in, and that way we'll be better able to read this report. Alright, we have this consolidated statement of operations, which is looking much better now. The revenues from different verticals have contributed to the total revenues of $21.3 billion, which is decline of around 9 percentage point from the prior quarters. The first quarter of 2023 revenues of $23.3 billion. The cost of revenues has also declined, but the extent of decline in the cost of revenue is not commensurate with the cost of the total revenue decline being seen, and that has pushed its operating margin lower. The income from operations this time around is at $1.17 billion in comparison to $2.66 billion a year back. So here you can get the idea of the revenue decline eventually leading to the operational profit decline, but the difference in the magnitude of changes in the total cost of revenue and the cost and the total revenue has created this situation where the total operating income has dropped significantly, even though there is marginally less decline in the revenue. Here you can see that the income from operations are even below 50% of the prior year's earning. So that is a steep decline you can see, and that is mainly attributable to the fact that in any company, the cost of revenue comprises of two parts, the fixed cost and the variable cost. Even though with the lower production, the variable cost declines, the fixed cost more or less remains the same. And that explains this variance. Eventually, we have the net income of US dollar 1.14 billion in comparison to the net income of US dollar 2.49 billion a year back. We got this figure by providing for the income taxes. This time around, the provision for income taxes is also on the higher side in comparison to the first quarter of 2023. We already have these income before taxes, which is significantly lower than the income before taxes a year back. The net income is now down to just a little above US dollar 1 billion in comparison to the US dollar 2.5 billion year back. So that's a significant decline which we are observing in the net profit of the Tesla. The revenue have declined 9%, but the decline in net profit is more than 50 percentage point. Now coming to its cash flow, where the company is generating cash from and where that money is being spent, we get a good idea of how the company's cash flows are faring. The cash flows from the operating activities stood at US dollar 2.242 million only, which is a lot less in comparison to the more than 2.5 billion cash provided by the operations last time around. This is mainly because the outflow from the inventory is now much more. There is this backlog of deliveries that have resulted in the inventory pileup. Apart from these, there are not much notable changes. Account receivable is in negative this time around and higher than prior account receivables by a significant amount. So that is major change there. Of the cash generated from operations, we have seen that the investment activity has also taken significantly higher amount. So the net cash outflow from the investing activities stood at $5.08 billion in comparison to nearly 2.5 billion outflow last time around. Then comes the financing cash flow, and here the cash provided by the financing activity is in positive. The cash generation is at US dollar 196 million in comparison to the cash outflow of 233 million a year back. So there is some consolation on that front. But overall, because of the higher cash outflow in the investing activity, we have this net decrease in cash and cash equivalents of US dollar 4.7 billion, and that has lowered the total cash pile, the total cash and cash equivalents at the disposal of the company to US dollar 12.46 billion, which is almost 25 percentage point decline in the cash and cash equivalents from the prior figure of more than US dollar 17 billion. So this is what the company's operational side is looking like. Its revenues have stabilized and declined somewhat, even below expectations, and the net income is significantly lower. Now the company is taking initiatives to cut costs to improve its operating side so as to generate more bang for the buck. It wants to be more profitable. For that, it will need to become operationally leaner, and I think the CEO knows it and is taking the steps to ensure that is reflected in the results of next few quarters. Now we change here to the technical side. We will consider the stock price performance of the Tesla over last few sessions, last few weeks, and last few months, depending on the time horizon you are looking at. If you are a short-term trader, then all you need to consider is its recent price move, and in the recent price move you can see the extended consolidation phase. If you go back in time, say for the last 2 months, then you get to see that the price of Tesla has hovered somewhere in the price band of 150 to 180. Of course, there has been some variation, but that's minor variation. Apart from that, more or less, it has been kept confined in this price band. After the earnings report came in, we saw some spike in its trajectory. We had this run from around 140 to 200 levels in a few days, in few sessions, and afterward it went into consolidation phase with this immediate swing low coming in at usual 167. Now it looks likely that the short-term trend is bullishly inclined, and we have the formation of higher highs and higher lows since these deep of around usual 167. So in the short term, if your view is confined to only 2 3 days ahead, then I think the buy on dips is going to be a preferable strategy for you to adapt. And if there is some correction and it doesn't really decline past immediate swing low, then in that case, if you get it anywhere close to the 175 mark, we can go for the opportunity provided it consolidates and then stabilizes while showing the signs of bullish spurt therein. So that is precaution which we need to take. We do have to keep in mind that the trade can go wrong, and accordingly we should be taking the risk. So that also needs to be taken into account, and the risk reward ratio plays an important role in that. Expanding the time horizon to medium term, we have used this daily candlestick period here, and in it you can see that the decline which set in couple of months back is still casting in its influence on the price trajectory of the Tesla. After this immediate swing low, which is there around 140, we have seen spurt in the Tesla stock price, and it will be interesting to see if Tesla stock holds this immediate bullish spurt or not. If it does that, then I think in the near term, in the medium term, we will be looking at a possible revival in the Tesla stock price trajectory. So the next step to watch out for is going to be the immediate swing low around 170, and if it doesn't give way and continues to provide support to the Tesla stock price movement over next few days, next few weeks, I feel here also there is possibility of change in fortune in anticipation of the steps being taken by the Tesla to cut cost and therefore generate more profit from these revenues which aren't really growing much. So in that context, I think some sort of turnaround is possible, but for that we need to give it more time. Maybe after the stabilization, we'll be able to figure out the Tesla's next moves. So watch out for the price trajectory and pay attention to these immediate swing low over next few sessions. Expanding the time horizon to the longer term, we have these reversal from around the price levels of 299, which was established in the second half of last year, and from there on the trajectory has turned slightly bearish after finding some support close to the 140 mark. There has been some sort of revival in the Tesla stock, but unless it gathers momentum and eventually tries to rise above the immediate swing high, I feel we have to go with the flow and keep looking for the opportunities to short it. If you are a long-term trader investor, then I think it is not really prudent to go for any long trade here, and the possibility of it declining further in next few months is still pretty much there. And in the course of time, I feel that the Tesla stock might even drop below 100 in the coming months. So, keeping that possibility in mind, we have to adopt a sell on rally approach from the longer term perspective, and the immediate swing highs and swing lows become very important in that context. And with this formation of lower low and lower high, we can indeed find the opportunities to sell on rallies and then profit from these slightly bearish stance. So that is the stock price trajectory for the longer term. So depending on your time horizon, you have to see what kind of price moves are going to be favorably aligned with your strategy. And if you have this longer term view, I think adopting a sell on rally approach is appropriate. But if your time horizon is much shorter, and if you are looking for the short term, then adopting a buy on dips approach for over next few sessions is going to be worthwhile, and all you will need to do is try to keep the risk reward ratio favorable so as to ensure that in the eventuality of you getting the moves wrong, you getting the trade wrong, you don't end up losing too much money. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. Thank you all for joining in. Do like and subscribe to the channel. I'll be back with equally interesting companies to work with. See you next time around. Till then, goodbye.